Where did you?
Ripple, XRP, is bound to succeed and never plummet. Here is why today. Before I start talking about Ripple, XRP, I need to set the ground. So, please excuse me for not talking about the coin straight away and keep reading, as setting the base is essential here. So, in the financial world, two of the most important terms to comprehend are without a doubt, inflation and deflation, concepts that play a vital role in the way specific currency acts and reflects on the users. To understand both, Investopedia defines inflation as a process that occurs when the price of goods and services rise, while deflation occurs when those prices decrease. But what does this concept represent regarding benefits or detriment for those who keep the currency at issue? Well, it appears both inflation and deflation have an incredible repercussion in this matter. For starters, one needs to keep into account that inflation is a process that even when it may spontaneously appear on an economy, most of the times it is also created, or at least, stimulated by certain governments with the intention of obtaining a more significant benefit. I know, right? It does come across as a tough thing to assimilate, but the truth is that on an inflationary process people tend to sell and buy more goods and services, and this is actually not rocket science. In fact, due to money tends to lose its value, people refuse to hoard it and decide to use it instead. With this said, the main benefit people can obtain from an inflationary process created by the government is the warranty that money will not be accumulated and kept by just a few, which in case of happening would create a concentration of power that only can be interpreted as a pyramid scheme, one of the labels with which the crypto environment is related the most with. In this sense, it results clear that in order for certain coins to perform in a way where wealthiness is equitable, it is necessary for the governance of such coins to perform a pseudo-inflation that guarantees the distribution of their money in an appropriate form, and that is precisely one of the actions that we don't get to see in the cryptosphere. Ever since Bitcoin, BTC, appeared in the financial landscape, the distribution of their money has been unequal and dissimilar, meaning only a few manage to have incredible amounts of their cryptos and accumulate wealth. Like this, the previously mentioned pyramid scheme results inevitable, and the only possible option for the coin is to start a decreasing path, if not already started, that will conclude with the stagnation of the token. Contrary to this, the coin that seems to have all of this calculated is none other than Ripple, XRP. The third largest cryptocurrency of the market despite being strongly criticized for locking up more than the half of their total supply. It has been building up the foundations of an economic policy that benefits its users in the future. So, be sure that all of the moves that Ripple, XRP, has deployed have been more than calculated, including the predilection of the token to relate with bank entities that, to say the least, looks a lot like what governments do when they artificially inflate their coins and put their fresh created money out there in the banks. In fact, the ability of the token to determine somehow the rate distribution of XRP is a way of the coin to emulate the inflation that governments construct whenever in need, a fact that avoid the hoarding of money and the wrong accumulation of power. XRP is a coin that sooner or later will become the one to follow in the sector, so instead of pointing out the centralization of the crypto, what we all should be doing is supporting the works that the token realizes for us to obtain a benefit in the long run.
Bitcoin is a scam, claims ousted CEO of PayPal Bill Harris, co-founding but short-lived CEO of PayPal, has written an opinion piece on Bitcoin in which he claims the cryptocurrency is a scam. A colossal pump-and-dump scheme, the likes of which the world has never seen, published on Recode Tuesday, April 24. Harris's argument targeted Bitcoin on three fronts, asserting it is useless as a means of payment, is extremely volatile, and has no intrinsic value. He also placed heavy emphasis on the criminal exploitation of resource-hungry mining, targeting by hackers, and the scam-beset history of initial coin offerings, ICOs, failing to distinguish the latter fundraising model from Bitcoin itself. Harris also asserted that most ordinary Bitcoin buyers are everywhere breaking the law, failing to file taxes on their capital gains. Moreover, most heavy users of Bitcoin are criminals. Much of the article appears to lump together Bitcoin with other crypto assets, despite the point of the article ostensibly being how Bitcoin is itself a scam. Harris neglects to mention the political arguments for cryptocurrencies in the post-2008 financial crash context, including censorship resilience, tamper-proof consensus, and decentralization. Harris was ousted from his role as CEO of the newly merged X.com and Coinfinity, the entity which would later become PayPal, in April 2000, just 1 month after the merger. This has happened amid allegations he was unable to handle scaling issues posed by PayPal's success, as well as his misplaced focus on unproductive approaches. Peter Thiel, who became CEO of PayPal after Harris's ousting, and stayed conspicuously longer in the job, is famous for being bullish on Bitcoin, comparing it to gold and affirming its potential to revolutionize the financial sphere. Yesterday, news broke of an MIT article looking into ways to destroy Bitcoin, envisaging control by governments or even a stealth Facebook takeover. Bitcoin is the greatest scam in history. It's a colossal pump-and-dump scheme, the likes of which the world has never seen. I'm tired of saying, be careful, it's speculative. Then, be careful, it's gambling. Then, be careful, it's a bubble. Okay, I'll say it, Bitcoin is a scam. In my opinion, it's a colossal pump-and-dump scheme, the likes of which the world has never seen. In the pump-and-dump game, promoters pump up the price of a security, creating a speculative frenzy, then dump some of their holdings at artificially high prices. And some cryptocurrencies are pure frauds. Ernst & Young estimates that 10% of the money raised for initial coin offerings has been stolen. The losers are ill-informed buyers caught up in the spiral of greed. The result is a massive transfer of wealth from ordinary families to internet promoters. And massive is a massive understatement. 1,500 different cryptocurrencies now register over $300 billion of value. It helps to understand that a Bitcoin has no value at all. Promoters claim cryptocurrency is valuable as 1. A means of payment, 2. A store of value, and or 3. A thing in itself. None of these claims are true. 1. Means of payment. Bitcoins are accepted almost nowhere, and some cryptocurrencies nowhere at all. Even where accepted, a currency whose value can swing 10% or more in a single day is useless as a means of payment. 2. Store of value. Extreme price volatility also makes Bitcoin undesirable as a store of value. And the storehouses, the cryptocurrency trading exchanges, are far less reliable and trustworthy than ordinary banks and brokers. 3. Thing in itself. A Bitcoin has no intrinsic value. It only has value if people think other people will buy it for a higher price, the greater fool theory. Some cryptocurrencies, like Switecoin, which is redeemable for workout gear, are the equivalent of online coupons or frequent flyer points, a purpose better served by simple promo codes than complex encryption. Indeed, for the vast majority of uses, Bitcoin has no role. Dollars, pounds, euros, yen and renminbi are better means of payment, stores of value and things in themselves. Cryptocurrency is best suited for one use, criminal activity. Because transactions can be anonymous, law enforcement cannot easily trace who buys and sells. Its use is dominated by illegal endeavors. Most heavy users of Bitcoin are criminals, such as Silk Road and WannaCry ransomware. Too many Bitcoin exchanges have experienced spectacular heists, such as NiceHash and CoinCheck, or outright fraud, such as Mt. Gox and Bitfunder. Way too many initial coin offerings are scams. 418 of the 902 ICOs in 2017 have already failed. Hackers are getting into the act. It's estimated that 90% of all remote hacking is now focused on Bitcoin theft by commandeering other people's computers to mine coins. Even ordinary buyers are flouting the law. Tax law requires that every sale of cryptocurrency be recorded as a capital gain or loss and, of course, most Bitcoin sellers fail to do so. The IRS recently ordered one major exchange to produce records of every significant transaction. And yet, a prominent Silicon Valley promoter of Bitcoin proclaims that Bitcoin is going to transform society. Bitcoin's been very resilient. It stayed alive during a very difficult time when there was the Silk Road mess, when Mt. Gox stole all that Bitcoin. He argues the criminal activity shows that Bitcoin is strong. I'd say it shows that Bitcoin is used for criminal activity. Bitcoin transactions are sometimes promoted as instant and nearly free, but they're often relatively slow and expensive. It takes about an hour for a Bitcoin transaction to be confirmed, and the Bitcoin system is limited to 5 transactions per second. MasterCard can process 38,000 per second. Transferring $100 from one person to another costs about $6 using a cryptocurrency exchange, and well less than $1 using an electronic check. Bitcoin is absurdly wasteful of natural resources. Because it is so compute-intensive, it takes as much electricity to create a single Bitcoin, a process called mining, as it is to power an average American household for 2 years. If Bitcoin were used for a large portion of the world's commerce, which won't happen, it would consume a very large portion of the world's electricity, diverting scarce power from useful purposes. In what rational universe could someone simply issue electronic script or just announce that they intend to and create, out of the blue, billions of dollars of value? It makes no sense. All of this would be a comic sideshow if innocent people weren't at risk. But ordinary people are investing some of their life savings in cryptocurrency. One stock brokerage is encouraging its customers to purchase Bitcoin for their retirement accounts. It's the job of the SEC and other regulators to protect ordinary investors from misleading and fraudulent schemes. It's time we gave them the legislative authority to do their job. William H. Harris, Jr. is the founder of Personal Capital Corporation, a digital wealth management firm that provides personal financial software and investment services, where he currently sits on the board of directors. Harris has founded several companies, including Ztech, a cybersecurity company, and Passmark Security, a consumer authentication company. He has previously served as a director for several public and private companies, including MyVest, RSA Security, Yodel, GoDaddy, Earthlink, Macromedia, Visual Sciences, Nextag, Answers.com, Avalra, Business.com, Lower My Bills, and SuccessFactors. Earlier in his career, he served in various senior positions with Intuit Incorporated, a developer of financial and tax preparation software, most recently as CEO. He also served as CEO of PayPal Incorporated, an online payments business. Reach him at BillHarris_PC.